Thanks for joining me this Friday, the 27th of September. I'm Grady Wolf, market analyst with Bell Direct, and this is the weekly market update. Locally this week, the ASX started with a red run before investors regained optimism to rally the ASX over 8,200 points later in the week, all based on rate outlook both in Australia and the US. This week, the RBA maintained Australia's cash rate at 4.35% for the next period, which investors and the market were expecting, but investors sent the ASX lower on Tuesday after the rate decision was handed down due to commentary out of Australia's central bank, signalling the most recent projections for inflation in Australia indicate that it will be some time yet before inflation substantially hits the target 2 to 3% range. Without inflation taming to that range, the RBA's elevated cash rate of 4.35% will continue to hurt earnings for companies with higher input costs and subdued demand due to the high cost of living environment for all in Australia. While headline inflation in Australia fell to an annual rate of 2.7% in August, key inflation drivers remain sticky, which is prolonging the RBA's rate cut outlook. Underlying inflation for the same period was 3.4%, which is a step in the right direction, but still too high for the RBA's liking. Key inflation drivers, including house price inflation, input cost inflation, rental price inflation, insurance inflation, food, alcohol and tobacco inflation and retail sales remain high. With each of these key drivers continuing to grow every month, the RBA's job is far from done in combating inflation in Australia. The impact of higher interest rates environment is also hitting Australia's economic growth, with GDP easing to a mere increase of 0.2% for the June quarter and 1% for the year to June. Higher for longer may be the view in Australia, but in the US, another issue is being faced in the form of a possible recession. The Fed's aggressive rate hike strategy post-pandemic worked to cool inflation in the world's largest economy, but it came at the cost of now verging on recession. With economic data in the US equally in favour of a recession and a soft landing with half and half in favour of each, the Fed will need to monitor economic activity closely and possibly cut by a further 50 basis points at the next meeting to ensure a recession is avoided. Elsewhere this week, we saw some key corporate updates locally that saw major share price moves. Luxury online fashion platform Cettire rocketed 75% on Tuesday after the company released its annual report for FY24, including gross revenue almost doubling that of FY23 to $978.3 million. The company delivered a margin of $155 million, active customers hit almost 700,000, and adjusted EBITDA came in at $32.5 million. The results indicated that despite the high cost of living environment in Australia, Australians and global consumers alike are still shopping in the luxury space. Boss Energy rallied earlier in the week with a gain of 11% in the aftermath of Microsoft announcing the signing of a deal with Constellation Energy to restore a nuclear power plant in the US, of which Microsoft will purchase 100% of its power for AI ambitions for 20 years. This drives value of uranium and also Boss Energy, which has a 30% stake in the Ultimesa mine. It's a uranium mine in South Texas. And embattled casino giant Star Entertainment Group was in a trading halt at the time of releasing financial accounts, outlining the group posted a $1.7 billion loss in FY24, with shares expected to resume trading later this week. Brickworks also released FY24 results this week that sent the share price up over 8% on Thursday. For the last financial year, Brickworks reported a statutory net loss of $119 million, which is a 130% increase on the last financial year. The company's full-year dividend rose 3.1% to 67 cents per share. Underlying EBITDA declined 80% to $157 million, and revenue fell 8% to $1.089 billion. A slump in the results that investors apparently welcomed, as the market may have been expecting much worse. Now, locally from Monday to Thursday, the ASX 200 fell 0.07% in a very mixed trading week as investors digested key economic data and rate moves. Material stocks soared 6.42% on a rise in the price of iron ore this week, while financials fell 3.81%. The winning stocks over the 4 trading days were led by Boss Energy, soaring 24%, while Coronado Global Resources rose 22.22%, and so did Deep Yellow. Light & Wonder fell fell 15.73%, while Premier Investments lost 10.56% over the trading week. On the broader market index, the All Ords rose 0.3% this week as Neo Metals soared 68.6%, while Cettire jumped 37% and Webjet rose 36.25%. The most traded stocks by Bell Direct clients this week were BHP, Woolworths, CBA and Fortescue. Clients also bought into Paladin Energy and Ampol, while taking profits from Clarity Pharmaceuticals, Rio Tinto, NAB and Northern Star Resources. The most traded ETFs by our clients this week were led by BetaShares Australian Equity Strong Bear Hedge Fund, SPDR S&P ASX Australian Government Bond ETF and BetaShares Nasdaq 100 ETF. On the economic calendar front next week, we can expect investors to react to Australia's trade balance data out for August on Thursday. Overseas key Chinese economic data is out early in the week, with manufacturing PMI out for September on Monday, with the market expecting a slight increase from August, and that would be very welcomed. In the US, key manufacturing PMI and jobs data are out later in the week, with the market expecting further easing in the labour market, but an increase in manufacturing PMI, which would also be very welcomed. And that's all for this Friday. Have a wonderful Friday, a great weekend, and happy investing.